Good morning, traders. Richard here doing a quick Ichimoku cloud chart market review of the Nasdaq100 index futures contract. In the last update, we were looking at the Nasdaq retesting this old cloud chart resistance zone for support, since the index managed to break past it, and it was very close to the other resistance zone. It's these old highs there, and then the market managed to find support there. Rally retested that resistance zone. Now the other upside target is the ultimate 16250 resistance zone, and that comes from that high there. So it will be interesting to see if the market is going to touch that and then maybe consolidate this move. But we've had a really great swing trade here. This comes after the market found support here at these old cloud chart support levels, and then subsequent we had a couple of other cloud chart buy signals on the way up, and then the rally ensued to run into these resistance targets. The first one was the top end of the cloud there. The second one was the top end of the cloud level there, and these old highs, and ultimately this high of July 2023. So these are the upside target for this current rally. Now the downside risk is that the market needs a bit of a consolidation of this move. If we look at Fibonacci retracement of this move, what these levels would be, or where these levels would be. Let's just load a Fibonacci retracement zone there. So if we look at this low here up to this high there, the Fibonacci retracement, yeah, you can see where the interestingly where the cloud chart support level is right there at a 38% Fibonacci retracement. You can see there. So that might be a support zone for this quarter and the next one. So we kind of had a nice seasonal strong rally. Expect a consolidation of this move, and the downside risk is the 23.6% Fibonacci retracement, and that coincides very well with the standard line of the cloud, and the 38% retracement coincides very well with the top end of the cloud. So these are the downside risk targets if we get a consolidation of this move, since we're now closer to resistance than support. And do expect some selling to come into the market at this support zone, this resistance zone between these highs and the ultimate high of July there. So quite a lot of expectation here. AI driving the big cap stocks, driving the market higher, the others lagging behind. So that's the downside risk. But these are the downside targets. You can see where these support levels are. Now, if we just redo that Fibonacci extension there, and we take it up to the top end there, you can see these levels are not too far there. The 26.3 retracement is there. The standard line can catch up to that, and then you still have the top end of the cloud as a 38% retracement over the next couple of weeks. So these are the downside support targets to keep in mind of this current rally. And if we just recap those traditional cloud chart buy signals, it was the support rebound there. Then we got the actual on the 4-hour, we got a beautiful buy signal there on the Ichimoku. Let me see. Yeah, much better to see the trades on here. And then we got a Ichimoku cloud chart buy signal there. Then a cloud cross second buy signal. Another cloud cross breakout, another buy signal. And then the rally just kept on going. So then we had a very, very strong rally. But now note incredible strong diversion between the market rally and the MACD indicator there. So there's a bit of a risk in that zone. But what we are concerned about now is the distance between the cloud and the top end of the cloud and the actual price action. So it's a little bit extended from this top end cloud chart level. So if we can get a technical retracement, if this resistance level holds here at 16250, we could see a snap back down to retest this old top end cloud chart support levels first, and then try and get another attempt into the year-end rally. But these are the downside risk targets. The market's a little bit extended at this point in time, so upside potential getting a little bit challenging in view of the possible overhang of the shares, potential sellers coming from these highs here, and people that are late to the party. So I do expect some form of technical retracement of this move. But if you look back at these Fibonacci levels, this whole zone can bring us within a top end cloud chart zone there. as well with a standard line. So let's say it takes out that meets that upside target, and then we could see a consolidation back down to this 14,133, and then the 38% cluster, which coincides well with the front end of the cloud. But the good news is we're back above the top end of the cloud, so that's bullish long term on the daily. If we're going to look at the 4-hour Ichimoku quickly, you can see the nice little strong rally since the cloud cross. It kept on just grinding higher in a steps phase approach. Now support here is the top end of the cloud. Watch out, 15,817, and the standard line there as well as the top end of the cloud there. These are two support zones to keep an eye on. Any kind of consolidation back down there, but you can see it every time it comes back, it rebounds from cloud chart support levels very close to that standard line of the cloud. Becomes quite critical. And as for the weekly Ichimoku, I'll switch to a cleaner chart here quickly. We'll go to this one here. You can see how we now, this top end cloud resistance was this bottom support zone there. These were all support lows there. You can see that resistance zone there, another resistance zone. Now we broke past that up for 4 weeks. Could see some form of a consolidation if there's more sellers coming in, because it's now moving into this resistance zone there. Very difficult for the market to push past that, the highs there. Incidentally, the ultimate the 26 was the high for the Nasdaq top there. So maybe next week we'll see a bit of a pullback or a consolidation in the current Nasdaq rally. But so far so good. Very strong rally. The 4-hour and daily gave us some really great buy signals, and the market's now quite extended from the critical key Ichimoku cloud chart levels. But watch out for any kind of pullback or consolidation back down to the top end of the front end of the cloud and the standard line and turning line of the cloud. Just a quick clarification that it was the week of the 26th of 2021 when the market made a top, and it was actually on the 22nd of November. So happy anniversary for the market top, which starts tomorrow. So we'll see how this pans out. Now, if we incorporate artificial intelligence using Ichimoku cloud charts signals in combination with AI, artificial intelligence, then I've got a volatility breakout signal back here in October. That's worked out beautifully. This AI still in a trade here, so you just adjust your own stop loss depending on your risk profile. But the AI is still in a the volatility breakout signal is still in a the AI is still in a signal there. Now this AI volatility breakout signal is generally one that in the testing period, let me just pull back, there we go, in the testing period is 61% accurate. So we're kind of looking for signals that's in excess of 61%, 60% plus in accuracy. So the AI does generate quite a few good signals, and the volatility breakout signal, swing trade signals, 84% accurate over the testing period. So these are the trading statistics of the AI when we developed it. And now if we look at the hourly one, there's also a beautiful swing trade signal on the hourly chart, and the AI is still in that signal trade there. You can see a beautiful swing trade there, and then you take comfort in the fact that the futures crossed the cloud, and off we go. And then there's another volatility breakout signal there. So the swing trade and volatility breakout signal on the hourly and the 4-hour Ichimoku cloud worked quite well. So the risk factor now is, in terms of the big picture review here, is that the market is the rally's a little bit concentrated in the large cap, the Magnificent Seven, so to speak. And yeah, we've got the Nasdaq 100 equal weighted index versus the Nasdaq 100 index, and you can see the price action is very different here. Almost the same, but still not 100% same. You can see where the positioning of the price action versus the cloud and the resistance zone, as well as the Nasdaq 100 heavily loaded with the top 7 stocks there, driving a disproportionate part of the rally there. So it's not a broad rally, so to speak. If you look at the equal weighted and the Nasdaq normal weighted, So the question now becomes, will the tech stocks take a bit of a consolidation and a breather after hitting these resistance zones or these highs, and then the rest of the market catching up, the rest of the Nasdaq 100 stocks catching up with the performance? But so far so good. Nice year-end rally in both indices underway after finding support at critical October cloud chart support levels. But so far so good. But be on the lookout for a consolidation back down to the top end of the front end of the cloud. So that's the downside risk, as well as the bottom end of the front end of the cloud there, 15630. That's now if this resistance zone on the daily and the 4 hour comes back into play. If we just go back to the daily there, so as this resistance zone holds, if this resistance zone holds and we don't break out to make new highs there, then there's downside risk back down to the front end of the cloud, the top end cloud there, level 15817, and then this 23% Fibonacci retracement over the next week or so. Until next time, happy cloud chart trading. Bye for now.